Hello! Today I had the most important topic for you, without which it's impossible to understand technical analysis and in general engage in trading binary options. I'll explain how to read candlestick charts and use them correctly in technical analysis. If this topic is still unclear to you, make sure to watch this video until the end. Yes, there won't be any trades or strategies discussed today, but you'll gain a strong foundation for trading and making profits in any financial markets. Let's start by understanding what Japanese candlesticks are and why they are colored in red and green. Each candlestick shows how the price moved over a specific period. If you've chosen a 5-minute chart, the period is 5 minutes. If it's a 1-minute chart, then it's 1 minute and so on. So, when a trader looks at individual candlesticks, they get 4 types of data: the opening price, the closing price, the highest and lowest prices, reached by the candle from opening to closing. Candlesticks consist of a body and shadows, but they can also have no shadows at all, when the candle will only have a body, or it may consist only of a shadow and very small body, resembling a stick. This happens when there are almost no trading volumes in the market. The reasons can vary: an unpopular asset, many holidays during the trading session, or market participants waiting for something. For example, important economic news might be pending. Now about the color. If you have noticed, red and green are the most commonly used colors for candlesticks on charts. They help understand whether the currency price fell or rose during the candle's existence period. If you see that the opening price is higher than the closing price, it means the asset depreciating during the time. Conversely, then the opening price is lower than the closing price, the candle indicates that the quote has risen. It's like an indicator that you don't need to set in the trading terminal. If most of the chart is red, it means the market is declining. When there are more green candles, it means buyers are stronger than sellers, and the market sentiment is bullish. In reality, on many platforms, candle colors can be customized. You can paint them in any color you like, but most people are accustomed to red and green. As for how to use this in practice, I discuss it in my Telegram channel: strategies, life hacks, trading signals, and just support. Click the link in the descriptions and get all of this today. Now let's take a closer look at the components of candlestick. In technical analysis, there are entire fields where analysts make predictions based on candle size, shapes, and combinations. You can find all the methods in books by popular author Steve Nissen. For example, he has a very cool book called The Candlestick Course. An effective modern method is considering price action. It's like a new perspective on old methods. Candlestick analysis is great for binary options and yields excellent results, especially when combined with indicators or patterns. Let me give you a couple of examples. First, the rail pattern. These are 2 opposite candles next to each other. Here's an example on the chart. In a downtrend, a red candle appears, followed immediately by a green one, which slightly overlaps it. This is a signal that the market will reverse upwards, which often happens if the pattern is in the right place. Before I continue, please like and subscribe to the channel. There are many interesting videos waiting for you here about trading strategies, trading psychology, life hacks, and much more that will help you improve your skills in working with binary options. And now, let's move on to the second example: candlesticks with long shadows. They are also called peaks. If you see a cluster of these on the chart, it means the price may soon reverse. They indicate uncertainty, suggestion that the market lacks the strength to continue. I can't think of a better example than a pin bar. It's a candle with a long shadow on one side and a small body on the other. Then a pin bar appears at a level, consider it on the best reversal signals. Look at the chart. Here, after a rise in price, it started to fall, but soon a pin bar appeared, and the price reversed. Sellers didn't have enough strength to push the price down. Long shadow candles have names. For example, Ones like these are called doji. They have almost no body and large shadows, and these candles are called pin bars. Their old names are hammer and shooting star. If you see a large cluster of doji on the chart, like in this case, close the trading terminal. There is nothing to catch there. Such a gathering indicates that anything can be expected from the market, and it's better not to risk. But there is one very important point to note. All these candlestick patterns mean nothing at all if you see them in some random place on the chart. They only matter in the right places, and the right places are trend lines or support and resistance levels. Here's an example of an excellent bullish pin bar that appeared on a trend line. One of the best buy signals that would definitely bring you profit. If you've played Tetris, compare candles with long shadows in their places on the chart to the shapes that fall into the right slots. Only then will they make you money. Candlestick analysis is useless if a trader doesn't know what a trend is and how to identify it. So, a trend is the price movement in a certain direction. An uptrend or rising trend is when the highs and lows on the chart are getting higher each time. It looks like this. Here's the first high, here's the second, which is higher than the first, and here's the third, which is higher than the second. The same goes for the lows. Here's the first low and the trough after it's much higher, and here's the third low, which is higher than the previous two. To visually represent the trend, you can draw such a channel. Then the price approaches the upper level of an uptrend and pin bars, dojis and other long shadow candles starts to appear in this area. It's a very good sell signal, but even better is to wait until the chart is near such places and long shadow candles appear there. This will give a buy signal, that is, in the direction of the trend. A downtrend is a mirror image of an uptrend. If in a rising trend the lows and highs are rising, when in a falling one, they are falling. This low is lower than the previous one. The same goes for highs. If you draw a channel between extreme points, it will look downwards. It's better to open sell trades when the chart approaches the upper trend line and dojis and pin bars appears. Options are open for buying at the lower trend line. In short, remember the main rule, that trend is your friend and most trades should be in the direction of the trend. And one more rule, if you liked the video, hit the like button and subscribe. There is another market condition called sideways movement or consolidation. This is when the lows and highs of the price appear at the same level. Here's an example. All the chart's lows are almost at the same level. The same goes for highs. They don't rise or fall. Traders use consolidation to trade within it. Buy when the price is at the bottom of the sideways movement and sell when it's at the top. The peculiarity of the market is that it doesn't move into the direction all the time. The trend changes direction all the time. A very important part of analysis is to understand when this will happen. Now let's go through an example of how this happens. Here's an upward movement shown. The lows and highs are rising, but suddenly the price falls below the last low. Then the price forms a high, which is also lower than the previous one, and the new order begins, forming a downtrend. This situation is considered a trend reversal. After passing this point, you can consider what the price have reversed. And now I will explain the reverse situation. When a falling market turns into a rising one, attention to the screen. The lows and highs keep falling, and when the sellers run out of steam, the following happens on the chart. Another high is formed higher than the previous one, as well as a low. After the next high becomes even higher, you can confidently say that the trend has changed to bullish. Speaking of a complete reversal can be done when the price breaks through this point. I hope everything was simple and clear. The theory is over. Let's move on to practice, and meanwhile you can hit the like button and subscribe to the channel. It will help me develop it. I have a chart of McDonald's stock prices. On it you can clearly identify an uptrend. I mark it with lines for better perception. Before this rise, slightly earlier, there was a reversal. I'll switch to a 5-minute chart. It's clearer this way. Initially, the price was going down. At the same time, the highs and lows kept getting lower each time, but everything changed at this point. After it appeared and little further, the price broke through it. The chart reversed and started going up. Right now, the price is in the middle of the channel in a rising market, as soon as it reaches one of the trend lines. I want to open an option to demonstrate how trading in trends works. The chart touched the upper trend line and drew a pin bar near it. It's a good sell signal, so I'm opening a trade. Once again, I show why I entered the sell. It's a bearish pin bar that is at the trend line. This combination indicates that there will be a decline soon, or at least a correction. Additionally, you can look at the RSI indicator readings, and it's showing overbought conditions right now, an additional signal. As a result, the trade went into profit, an excellent positive point for the educational part of the video. Everything I've talked about in this video is a foundation of modern trading. If you understand how to read charts, learn to recognize the direction of trends, then you will be 50% closer to becoming a good trader. All that's left is to choose a strategy and start earning actively. You'll succeed in all of this, even if you don't think so right now. And it's time for me to finish. Wishing everyone great mood and huge trading profits. Bye!